the beauty of the futures market now is that it basically, at least right now, it's just a one-year future, right? So that's where we are. So for instance, right, where it is today, I can actually lock in to a one-year paper, knowing exactly, right, where the currency will be. And therefore, I can actually compute my profit. If you look at it from where we were before, where we only did the spot, okay, although we had a fixed, remember we had a fixed exchange rate. So again, it was attractive to investors because you know what the rate was. So long as you came in the right way, you go out the right way. So you can say to yourself, so long as there's no devaluation, right, this is how much I expect to make as a bond investor. What the futures will do is also help investors, you know, make their minds up as in terms of where the currency is going, and therefore, how much spread does the Nigerian bond have to give me to make it worth my while? You see, so it is a positive thing for especially foreign investors. Let's say my name is, you know, Johnson Ikechukwu. Okay, I'm a trader. You know, I trade with, say, China. All right. Now today, let's say I've gone to China, I've bought all my goods, all right, or I've agreed all my goods, and they've agreed that they will give me, say, for instance, 6 months credit. We're now in June, so that means I will have to pay in December. So I get back to Nigeria, right? I have my Naira. So I'm asking myself, okay, today, let's say, I'm going to speak assuming that this FX regime we have today did not exist. We were back on the old one. So you had the fixed one, which was 197.5, I remember. And then there was black market about 350, 360, 370, whatever it was. Now, he's going to say, okay, first of all, if I go to CBN, they may say my goods don't whatever, or it may take me God knows how long, right? If I go to black market, I don't know where it will be today. Maybe it's 350. Where would it be in December? 400. You know what? Let me try and buy my dollars now because I don't know where it's going to be in December. And basically, the earlier I can buy it, at least I know, you know, that I can pay for my goods in December, you know. So what that does is that it ordinarily puts pressure on the Naira. So the people that are now bidding, I'm bidding for FX today from the CBN or wherever I'm bidding for it, for something I don't actually need today, but I'm only afraid that, you know, since the Naira traditionally has only gone one way, in other words, depreciate, the point is that it's better for me to buy today than wait till December. Today, Naira is what? At least last I checked was about 280, okay? Now, I'm looking at the December futures, and it says Naira is 250. Okay, so what do? Now I can say for a fact, let's say my authorized dealer is, say, UBA. I call UBA and say, UBA, I want to buy the 6-month future. So effectively, I'm able to lock in, okay, 25, 250 to 1, locked in. So I know now that all I have to work for is 25 million to pay for my $100,000 container, let's say, which before, right, I would have had to go and bid for money I don't really need and then tie down Naira that I don't need. So now I've entered a contract which says that in December, right, I would deliver 25 million Naira to you and you would deliver $100,000 to me. Now, where is so in a way, I've basically done what? I've hedged. Now, let's assume that when we come to December, right, the Naira is not 250, it's 260. Haven't I saved myself 10 Naira, right, on every dollar I have? You see, so I've hedged myself, exactly. Now, conversely, if it goes the other way, where Naira is 240 instead of 250, right, then at least I know, well, 250 is what I'll pay. Now, there is a possibility, I haven't looked at the whole regulations, that you might be able to cancel a contract and buy spot. But of course, there'll be a charge from the dealer on that. You see what I'm saying? So that is the advantage now, you know? So rather than hoarding or putting pressure on the Naira, Now I can say, I only need dollars when I need dollars. I don't need to hoard dollars anymore. That's the difference. One of the reasons why foreign portfolio managers pulled back from Nigerian investments was principally because nobody was sure where the Naira was going. Like I said, there is a link between the currency and the securities markets. So because nobody knew where the Naira was going, right, there was no way I can go buy a term asset. So I'll give you an example. If I came in and I wanted to buy, I don't know, 10 million, 100 million Naira worth of bonds, all right? If I brought in whatever the equivalent amount was in dollars, and it was changed, at the CBN at 197.5, all right? And it's a 5-year bond. Let's assume now that the CBN wakes up the next morning and says, okay, we've realized the exchange rate is now 282. It means that when I sell that bond, I'm going to be coming out at 282. There is no way I can make a profit on that bond. Okay? No way. I've made a loss. So investors basically said, you know what, let's hold back and let's wait and see where the currency goes. Now that the currency is beginning to settle, right? And we have an idea, because what they would now look at is, okay, is the price stable? Is the price all over the place? Is it moving around like a yo-yo? Or is it basically stable? To the extent that it's stable, right? And you're saying, okay, even stable to tightening. You're saying to yourself, wow, it's better that I get in ASAP, right? So what you find is that investors today will be saying to themselves, now that I have a more stable currency, right? I can begin to say, yeah, let me look at Nigeria as a investment destination. Now, for instance, the reason why we were taken out of the Barclays and I think it was JP Morgan, was because of basically the ability to go in and out. Because then what was happening was people bought bonds, but then when they wanted to get out, they couldn't get out, or they can get out, but basically their money was given to them in drips and drabs. Now, a financial market can't work like that. It has to be easy entry, easy exit. So as we move to this exchange rate now, and the market goes back to easy exit, easy entry, there's a high probability that will come back and be put onto those indexes.